Most coins rise on momentum, but there is one pumping on $1 billion in revenues. It is Hype, and these are the numbers. In November 2024, Hype launched at $4. Within 1 month, it surpassed $30. By September 2025, it had reached $58. Today, it trades above $40, over 10 times its launch price. Hyperliquid, the platform behind Hype, generated in 2025 revenues of nearly $1 billion and earnings of $870 million, predominantly through trading fees on perpetual futures, also called perps. I will explain shortly what those are. But the important information is that 99% of fees are used to buy Hype coins from the open market. The coins, after purchased, are destroyed or burned, as they say in crypto. Hype is not growing on momentum. It is growing because the business that launched it generated real revenues and is using the proceeds to buy coins, supporting the price and reducing the circulating supply. And the business is also growing really fast. It has currently 1.2 million users, and the cumulative volume has grown like a hockey stick, exceeding $4 trillion of volume traded. The founders understood the importance of early adoption and had the idea of executing a massive airdrop for users who had started to trade on Hyperliquid. The airdrop distributed an average of $45,000 worth of coins to about 90,000 accounts. To be eligible, users had to demonstrate active accounts on the platform, connecting their wallets, depositing funds, and starting to trade, with more chances to receive coins the more they were trading. Hyperliquid did not allocate coins to venture capitalists because they would have flipped them as soon as possible. Instead, they allocated them to traders who had started to use the platform and could act as ambassadors and sources of referrals for the business. The airdrop recipients did not sell. They became the platform's most committed holders. In traditional finance, we call this alignment of interest between shareholders and the business. This strategy contributed to accelerated adoption, which translated into higher growth and early profitability for the business. Talking about the business, let's take a closer look at the core products offered by Hyperliquid, the perpetual futures, also called perps. The underlying assets are crypto like Bitcoin, Ethereum, Solana, and synthetic versions of stocks like Nvidia, Apple, Tesla, and also commodities like Brent oil and gold. The difference with traditional futures is that traditional future contracts have an expiry date. At the expiry date, the contracts are settled either with cash or the delivery of the underlying assets. If traders want to extend their position, they must roll into a new contract. Perps have no expiry date. Traders express a directional view, which is long if they think the price will go up, or short if they expect the price to go down. They can also use leverage, and they can hold their position for as long as they want. This is the order book. You see live bids and asks from every trader, updated in real time. Every order is recorded on the public blockchain. The level of transparency does not exist on any traditional exchange, and settlement is in USDC, the Circle stablecoin. And for those who do not want to trade directly, there are vaults, which are managed strategies where you can deposit capital and the strategy runs automatically. There is full transparency into what the strategy holds. Anyone can participate without placing a single trade. To access Hyperliquid, you need a crypto wallet, and Hyperliquid is currently not available to users in the US due to regulatory restrictions. To understand why Hyperliquid has become so popular with traders, we need to explain the core advantage of its technology compared to traditional finance. Bob Diamond was the CEO of Barclays Bank, and beforehand, he was one of the most prominent investment bankers. He's now the chairman of Hyperliquid's holding company. He explained the key advantage clearly in a recent article on Fortune magazine. In the traditional futures market, every trade passes through a clearinghouse. The clearinghouse sits between a buyer and a seller, guarantees the trade, and settles it, typically T+1, which means the next business day. The process costs money, takes time, and requires the clearinghouse to operate during business hours. Hyperliquid replaces the entire layer with code. Trades settle in under 1 second, 24 hours a day. No clearing fee, no counterparty standing in the middle. This is a structural advantage that has driven $4 trillion in volume onto this platform. Now, let me give you 3 reasons why I think Hype could go much further. First, the revenue model. Nearly $1 billion in fees in 2025, 99% going to buybacks. It's automated, transparent, directly tied to how much the platform is used. Second, real-world asset expansion. Equities, commodities, FX, all are tradable as perpetuals 24 hours a day. If even a fraction of traditional derivatives volume migrates on-chain, the fee jump would be massive. And third, the ETF push. Grayscale and Bitwise both have hype ETFs in the market. This opens US institutional capital through a regulated vehicle, remembering that US capital cannot access the platform directly at the moment due to regulatory restrictions. But every investment thesis has also risks, and these are my bearish themes. The first is the token unlocks. Hype has a structured vesting schedule with significant unlocking activity occurring through 2027 and beyond. This may cause selling pressure, which could exceed the buyback rate and depress the price. Second, North Korean hackers. In December 2024, security researchers found blockchain addresses linked to North Korean state hackers, actively testing the Hyperliquid platform for vulnerabilities. This means that the success of the platform and its magnitude made it a target for crime. Third, the centralization question. In March 2025, a rogue trader opened a large short position on a Solana meme coin called Jelly Jelly, forcing a liquidation event. Validators intervened and forced the positions to close. Although this made sense from a risk management standpoint, it effectively revealed that under pressure the protocol behaves like a centralized exchange, and therefore the decentralization claim has certain limits. In summary, Hyperliquid was built by people who understood the structural limitations of traditional finance, settlement cycles, intermediaries, opening hours, and used blockchain as the solution. The hype coin is not growing on sentiment. It is growing because the platform generates real revenues, and the revenues flows directly into hype buybacks. The investment thesis is grounded in real fundamentals. Quick disclaimer, this video is for educational purposes only, not financial advice. All investments carry risk. Please consult a qualified financial advisor. Thank you very much for watching this video. I have a background in investment banking and hedge funds, and I believe in applying traditional finance principles to crypto analysis. If you agree, please subscribe to the channel and drop a comment so that we can stay in touch and exchange our views. See you in the next video.